Hey guys, welcome back. Today I've got a play that I'm very excited about. You guys probably know how hot the electric vehicle stocks have been this year. Well, in case you forgot, here's Tesla, here's Nikola, and here's Workhorse. What do these stocks have in common? They've all exploded this year. Now, I think I found a stock that's going to follow the same trajectory, and it's called Hyliion. I'm not usually into fear of missing out and like rampant speculation, but I think that this is going to be a good play both for momentum and for long-term buy and hold. So let's analyze it right now. Alright, so we're going to be analyzing the stock ticker SHLL, which stands for Tortoise Acquisition Company. That's the company that's going to acquire Hyliion and make it public. Now, if you guys don't know how it works, a SPAC is a special purpose acquisition company. That's a company that raised money, got into the stock market, but it's kind of like a shell company. They don't really own anything. Now, their goal is to merge with a private company, and what the private company gets from it is they get on the stock market and they acquire the money that the shell company raised, and they use that for their growth. Risk versus reward is very good, and here's why. First of all, SPACs, the management team, actually investigate a lot of different companies before they settle with one of the private companies to acquire. So out of 200 companies, they chose Hyliion. Quick warning and disclaimer, a spec stock is speculative. It can either 5x or it can go to zero. We don't exactly know how the company is going to do. So please do not invest more than you can afford to lose. If it's going to be a problem for you and it's going to put you in duress, please don't do it. Now, I also have 325 shares of filming this video, so I'm long on the stock. I want to focus this analysis on two main factors. The first one is going to be market forces in 2020, and the second one is going to be the actual fundamentals of the company. Because to me, the fundamentals of the company are kind of the backstop, like what protects you from it going down too much in price. So the first aspect that I want to talk about is the market forces in 2020. As I showed in the intro, the electric vehicle stocks are extremely hot right now. It's a hot market for them and people are really willing to invest big into them. Now you have a group of investors, mostly the younger Robinhood trader, that are always after the next big thing. So they're very big momentum traders. When they see a stock that's hot, they all pile onto it, and sometimes the volume in a day is higher than the float of the entire stock, meaning that the shares just trade hands repeatedly and they're always selling it to for a higher price to someone else. Well, there's a trend that's emerging in the charts both for SPACs and for these electric vehicle companies. First, we have Tesla that's extremely hot and went from about $200 to $1,200 over the past year. But then after that, we had the SPAC Vecto IQ, which became Nikola and went from $10 as a SPAC to, at its peak, $90 when Nikola became the stock ticker. And then we had Workhorse that went from $5 to $22 in a matter of 2 weeks as it became popular on Robinhood. Now, these trends, to me, are very strong. If you look at the chart, there's a few patterns that emerge. When we add Vecto IQ, there's this discovery period, which is when people start hearing about it and when they announce that they're going to be merging with someone. So the stock immediately starts to rise, and as it rises, influencers start picking it up and making videos on YouTube about it and writing articles, like this one. Now, the way SPACs work, there's a delay between when the company announces that they're going to be merging and when the actual merger happens. So in that delay, you can see a decline in price and stabilization. And then as we get closer to the merge, it starts to rise again. And once they merge and we get the new ticker symbol, if you look at Nikola, that's when you see a big spike. If we look at DraftKings, which wasn't an electric vehicle company, but the first big SPAC this year that we heard about, the same trend happens. In the beginning, there's the discovery phase and it starts going up. Then people start to realize that, wait a minute, there's like 2-3 months before the merger. So there's a small decline and kind of stabilization. And then there's excitement that builds up when the merger happens again. And then steadily it goes up after that. Even during the pandemic crash, DraftKings still went up. So why do we care about this? Well, if we look at Shell's chart, the same trend is starting to form. It starts at $10, it went up to 32. Now as of filming this, it's down to 26.50 and it's stabilizing at that price. And as we get closer to the merger date, which is supposed to be at the end of Q3, which basically means about September 30th at the most, as we get closer to the merger, we should see a gradual increase as the excitement builds up again. And if my theory is correct, once they change to the new ticker symbol, which is going to be the Hyliion ticker symbol, HYLN, then we should see another big spike. And that's the time frame I'm looking at. For now, it's a 3 months play, and after that, we'll see what happens. So, what do you guys think? It's very speculative. It's my theory, but it looks like it might be happening again. There seems to be a pattern that keeps repeating itself. But what if my theory is wrong and I'm seeing a pattern that's not really there? I mean, I think it is, but I can be wrong. Well, that's where the fundamentals come as a safety net. Because if the company is sound and the products are good, then sooner or later the value is going to be there, and the price of the stock is going to reflect the strength of the company. Now, when we talk about market forces, we have to talk about the green revolution that's happening in a lot of states in the country. California, as usual, is at the forefront, and they recently passed the Advanced Clean Trucks Regulation, which mandates that companies over the next few years go further and further away from fossil fuel vehicles and more towards low emission vehicles. Well, guess who's well positioned to take advantage of that? Yes, Hyliion, because their trucks, which in this case they're considered the Class 8 tractor trailers, their trucks are low emission and they're going to be part of this revolution. So they stand very well positioned to have a lot of orders over time as companies are forced to replace their fleet. So that's just one more market force that's in favor of Hyliion in this case. So let's move on to my laptop and I'll show you some of the fundamentals that are going to be of interest for this company.
All right, so when they announced the merger, they gave us an investor presentation in which we can find a lot of really good information. Um, Hyliion, in case you don't know, they make drivetrains, which are the components, including the motor, that make the wheels go forward. Now, Hyliion is going with two products, one of which is already on the market, and they have 2 million miles driven. It's the hybrid electric OEM platform, which means that a company sends a truck to a shop, the shop installs this product, and when it goes back on the road, now it's an hybrid like a Prius would be. Okay, so that's very good because they get data for their software and their algorithm, and they're also establishing relationship with these companies that have big fleets. So it's a very smart transitional product. But eventually, though, they're going to move on in 2021 to the real flagship product, which is going to be the Hypertruck ERX. So they're going with the same technology platform as Tesla did, which is battery packs, as opposed to Nikola, which is going with hydrogen fuel cells. Well, the good thing about Hyliion is they're adding a natural gas component, so which is they call the extender. What that does is as the truck drives, the natural gas recharges the battery. Okay, so that extends the range to 1,300 miles, which is very good and very comparable to a current diesel engine. So that's their main differentiator among those three companies. And they already have a binding pre-order for 1,000 of these trucks. So that's very good. Like it's not just reservations that were non-binding or anything. These are 1,000 real orders, and of course, we can expect a lot more in the future. All right, I had to move the camera because it was covering this little part here, which is very important. So right now, this is today. What's available right now is most trucks are diesel, but Hyliion is adding that hybrid that we were talking about. But the benefits, as you can see, like aren't massive. They're okay, but it's nothing like to be that excited about. It's more to get a foot in the market and get data and everything. Like the savings, according to them, is 6% over time, over 7 years. Okay, so it's good, but it's not like amazing or anything. What's much more interesting is the future tech that we're going to be talking about. So as I was telling you, like this is Tesla, they're electric, Nikola is fuel cell, and Hypertruck is going to be electric. So they plan on starting production in 2021, and like as you can see, the upfront cost is very similar among the three. But where you see a difference is the fuel cost. Now, the Hypertruck and the Tesla's model are fairly similar, okay, because they're both using electricity mostly. But where the main difference is, Nikola, the hydrogen fuel is very expensive. And one of the big problems that I have with Nikola and what makes it more like a business plan than an actual company right now is they're going to be depending on building this big infrastructure of hydrogen fuel cell replacements and like refueling stations all across the US. Well, that's going to cost billions and billions of dollars, which they don't have. Okay, so they're going to have to raise that money to build these refueling stations, as opposed to the Hypertruck, which is going to be using mostly the natural gas. Well, there's already a network of natural gas stations across the US. So, according to them, with the 250 million that they're going to get from SHLL, when they merge, they get the money for their production and their growth. They are not going to have to raise any more money to start production of this model. This to me is very, very strong because it reduces your risks of dilution, which can be catastrophic. Like we see it in the market right now. Nikola went from $90, and when there's been talks about dilution, it dropped to 45. Right, so that's a big thing. I had to spend a little bit of time talking about it because that's going to be really major. So here's what's really another really important thing is the payload. The more the truck can carry, the more money the truck generates. Okay. Well, Tesla's technology, according to the specs, okay, would lose $140,000 over the 7 years as far as payload, which means weight that they can't carry. The truck doesn't have the power to carry it. Same for Nikola, 52,000. But they claim that the Hypertruck is going to make a gain of $35,000. So this has a huge impact in the 7-year total cost of ownership, which is where they claim that they have a huge benefit over diesel trucks and the other models that are going to be like offered by Nikola and Tesla. So they claim that Tesla's 7-year cost of ownership is going to be 438, Nikola's is going to be 637, and theirs is going to be 279, which as you can see is much lower than even diesel right now. Okay, so this is really their main competitive advantage right now. This is what we're so bullish about the company's technology for. So here's the graph where we see the specs for the different trucks. Of course, like don't assume that this is 100% like real. Of course, it's an investor presentation, but it should be relatively comparable. So as we can see, the range for the Tesla is much, much, much lower than Nikola, which is much, much, much lower than the Hypertruck with its range extender using natural gas. And this is the payload, which is what we were talking about, the weight of the truck, what it can carry. It can carry 53,000 pounds, which is more than a diesel engine, that's pretty impressive. But it's also much more than Nikola's truck and Tesla's truck. That means that on the long distance trucking routes, they're going to be able to carry more load and make more money per truck. That's very important. And now here's the refuel charge time. They claim that Tesla's model is going to take more than 30 minutes, and Nikola and the Hypertruck are going to take minutes. Of course, as with everything else, time is money, so the shorter period you are refueling, the better. And this is the timeline that they've established. As of filming this, we're about here in the middle, and they have their OEM platform. They're designing and working on the actual truck, and so in Q3 they're going to be starting all of the tests and the validation and everything, and they'll start production mostly in 2021, and then they'll be selling it because they already have partners, which is what's so good about Hyliion. They're very good at making partnerships, and they'll roll it out in 2021 with their partners. And then, if everything goes well, in 2022 is going to be volume production. Like with that's when they'll just crank out as many as they can. And these are their financial projections. Of course, as again, I always have to like give all the warnings. These are only projections, right? But because they already have a product on the market, it gives them a little bit of revenue. So they're planning on getting actually a small profit next year, which is very good. I mean, some of the companies are actually bleeding money, right? Tesla, big as it is, doesn't even make a lot of profit right now. So they're expecting that in 2022 is when you're going to start seeing real profit. But if you look at their projections, they think that in 2023 and 2024 is when like the mass production is going to start, and that's when they're going to start making like substantial profits. And for us as investors, it's going to be very good. I don't expect necessarily to hold it until 2024, but the way that it shapes up, I think that it's the type of company that you could probably hold for 10, 15 years and do very well. All right, guys, and this is the last slide I want to talk about, which is the actual valuation. Because let's face it, what do we guys care about? It's investing and making money, right? So we care about the share price. So when they're doing this pro forma valuation, they use the share price as $10, but right now it's at 26.50. Okay, but let's use their numbers. At $10, they value the company at a billion, 1.1 billion, basically, including the debt plus the cash on hand. Now, if we transfer this to 2650, then we get a 2.6-ish billion valuation. The reason why we're so excited is that Nikola, which is a similar type of company, they're in the same field, they're doing trucks exactly the same, they have a $20 billion valuation. Recently, while I'm filming this, an analyst gave them a buy rating at $45, which gives it a $20 billion valuation. Even though Nikola, as we saw in the previous slides, has worse technology, potentially, and is more like a business plan and not an actual product. As opposed to Hyliion, which has a strong team, has a lot of partners, they already have orders, and they have a product on the market right now that they're getting information and income from, and they're valued at 2.5 billion. So we can reasonably expect that once it actually merges and they actually become Hyliion and they start getting analysts to look at it, hedge funds are going to be investing into it, we can easily assume that we're going to be getting double or triple our money. Okay. I can't overpromise or anything like that, but I'm extremely confident about it, and that's why I have my own money in this stock. I'm very, very comfortable with the 2.5 billion valuation, which is actually comparable to Workhorse, which is a very small company, which doesn't do exactly the same thing. They're not focused on tractor trailers. They do what's called last mile delivery trucks for FedEx, UPS, USPS. Okay, but they're also electric vehicles, but they have a 2 billion valuation. That's the stock that went from $5 to 22 in literally 2 weeks because it's such a hot type of sector. So 2.5 billion. I love this stock. Under $30, it's a good buy. If you can get it under 25 right now, I think it's almost a no-brainer. And if it dips back to 20, because I mentioned in the charts, like there is a tendency for these SPACs before the merger to drop. If you can get it under 25 and even better under 20, it's a no-brainer.
Guys, I really hope you enjoyed this video and that you learned a little bit about this company. And I don't know if you're as excited as I am about it, but I think it's a winner. I think it's going to be a big gainer, and I'm going to be holding it for a while. Now, if you're interested in SPACs, which have a lot of momentum right now, my next video is going to be about the upcoming ones in the food industry, energy industry, and a few others. And we'll try to see which one might be a big winner too. Now, so subscribe for that if that's interesting for you, and I'll see you in the next video.